Who wants to be a millionaire? Everybody, right? Hey, it's Julian Gordon, your friend on the journey to freedom. And in today's episode, I'm going to share with you the 7 different kinds of millionaires that there actually are so that you can choose the one that you're going after and reach your desired destination.
Wake up, it's time to be free. Wake up, what's blind now I see. Wake up, it's time to be me. Wake up, my mind is the key.
Wake up, it's time to be me. Wake up, my mind is the key.
Let's actually do a little quick exercise. Quick exercise. Real quick, I want you to log into your bank account wherever it is. I want you to log into your main bank account, or you can just do this in your head based on when the last time you saw it. I want you to take the amount of cash that you have. I want you to take the amount of cash that you have in your bank account, and I want you to divide it by the number of years that you've been working. So if you have $20,000 saved in your bank account and you've been working for 10 years, meaning that you graduated college at 22 and you are now 32, what did I say? You had $20,000 saved. That means that 20,000 divided by 10 years of work means that you've only earned $2,000 per year for the last 10 years. That's what's left over after all your expenses, right? So I want you to take that number of your liquid assets right now. You might be able to ballpark it. Maybe you looked at your account recently because it was near the first of the month, right? And I want you to divide that by the number of years you've been working. Divide that by the number of years you've been working. How is it so that most of us actually aren't keeping at least $10,000 a year? How crazy is that? And all of you are smart, hardworking, intelligent, right? But that number that I just shared with you, that is actually the number that you've been accumulating each year. Now, I know you may have a single family home, which is not really an asset, etc. Assets are things that pay you. Single family home never pays you unless you actually sell it, okay? But that number should be a wake-up call for those of you who are here tonight, okay? So let's get into it, all right? So what we're going to go over right now is the 7 different types of millionaires. I want you to be very clear on which one you want to be and which one you want to go after. And we'll start with the first one, okay? The first type of millionaire that it actually exists is an earned a millionaire. I want you to type that into chat. It is earned a millionaire. Earned a millionaire. Type that into chat. Earned a millionaire. That's number one, okay? Earned a millionaire is somebody who is actually working at a job. And if you think about somebody having a 40-year career, right, and they make $25,000 a year, I think that's close to minimum wage or somewhere around there. 40 times $25,000 a year is $1 million. So guess what? Day laborer down all the way down to day laborers, because $25,000 a year is $12.50 an hour for 40 hours a week. Okay, so even a day laborer is probably going to make $1 million over the course of their lifetime. Okay, even a day laborer. So it's kind of interesting. We all make $1 million. We don't all keep $1 million. Okay, we all make $1 million, but we don't all keep $1 million. All right, so that's the first one, and that comes from having a job. Okay, the second type of millionaire is a home equity millionaire. A home equity millionaire. Okay, I want you to type that into chat. Home equity millionaire. This means that because of the value of your home at this point in time, because it's appreciated, or because you pay, and or because you made upgrades or paid into the mortgage, there is equity in your home. So your home may be worth $500,000. You bought it at for $400,000, but your mortgage is down to $300,000. So it's worth $500,000, but your mortgage is at $300,000, meaning that you have $200,000 in equity, right? Now, some of the older folks, people in their 60s ready to retire, some of them have paid off their full mortgage, and so now their net worth is tied into their home. Their home is worth $500,000 and they have no mortgage left. But the thing about a home equity millionaire is that your wealth is tied into your granite countertops. It's stuck in the walls of your home, right? You can't eat appreciation and you can't eat your granite countertops, right? So it's good that you have an asset, have somewhat of an asset, because again, an asset is something that puts money into your pocket, right? even after you've paid off a mortgage 30 years down the line, guess what? That mortgage actually gets translated into housing fixes because now your house is 30 years old, right? And the depreciation that you were taking on that house every single year now goes off after, I think, about 27.5 years. That depreciation goes off, and now you aren't able to write off as much on your taxes. Okay, so when you look at the word mortgage, just like mortician, the word mortgage literally means death pledge. This is why people like Robert Kiyosaki say that a single family home is actually one of the greatest weapons that prevents people from actually becoming free. They were told that it was an asset and that homes always appreciate, and from a historical trend, they do. But if you ask anybody in 2007 who lost their home, homes don't always appreciate. There are people whose homes are underwater, meaning that what they paid for it is actually worth less than what they actually paid for it. But if they stay in there, it may come back up, okay? So that's the second type. There's earned a millionaire, and then there's home equity millionaire, okay? Now, the third type is a paper equity millionaire. These are people who have money stuck in stocks. It's not really stuck. Stocks are pretty liquid. But when you think about 401ks and IRAs, a lot of that money is stuck because it's tax deferred and things of that nature. But on paper, this person is worth more than $1 million because they've been paying into their 401k and their IRA, et cetera. They on paper, they are a millionaire. Okay. When you add their cash account, when you add their real estate, and you add in their stocks, they're millionaires. There's a lot of people in the Silicon Valley who right now are millionaires, right? When you look at the valuation of their stock. But that could change in 2.2 seconds. If the economy drops, that hot startup tech stock that is now $100 could drop to $10, and all of a sudden they're not a millionaire anymore because they didn't cash out when it was $100, right? So on paper, they are actually a millionaire. But like when Weight Watchers stock dropped, Oprah lost like $300 million or something like that in a day, right? Because the Weight Watchers on paper, she was this one night, and then the next, and within 24 hours, it had dropped. So this is a paper equity millionaire. So type that in. That's paper equity millionaire, meaning that you have an investment, but the stock market can change. If you aren't actually watching the stocks every single day, a stock could drop because a CEO did something crazy or somebody died using that product, and all of a sudden you weren't paying attention and that stock dropped and you didn't cash out. Okay. Fourth type of millionaire is a cash savings millionaire. And I think this is the one that most people envision. I want you to type that in. That's cash savings millionaire. And when people think of a millionaire, I think that this is the one that most people think about, is a cash savings millionaire, meaning that when I go look at my bank account, in fact, you shouldn't be keeping your money in banks, right? I'm actually working on moving my life to be bankless, meaning that I only use banks for my emergency fund and for my monthly expenses. But because, and here's why, because banks are paying you 0.03% interest on your money, right? You've been told that banks are the safe place to keep your money. It's better than under your mattress, right? Because if your house catches on fire, it's gone. But banks are only paying you 0.03% interest. Now, the rule of 72 says if you take 72 divided by the interest rate, 0.03, that actually gives you the amount of time it'll take to double your money in a bank. So 72 divided by 0.03, it means that it would take you 2,400 years to double your money in a bank right now. It would take you 2,400 years to double your money in a bank right now. You do not want your money sitting in a bank because inflation is growing faster than 0.03%. So you're actually losing money by keeping it in the bank. You actually want that money to be out in the world working for you in investments in real estate, businesses, stocks, etc. Okay. So that is the millionaire that most people envision themselves being, is the cash savings millionaire. Number 5, a company or job revenue millionaire. Remember, your salary is not income. They tricked you and called your salary income, but in a business, income is revenues minus expenses equals income. So your salary is actually your revenues. Then you have your living expenses. And then what's left over at the end of the month, that's your actual income. Okay. But a lot of people have more month left over at the end of the money instead of having more money left over at the end of the month. Okay. So the reality is I said company, job, revenue millionaire. Most people don't have a job that's going to pay them millions. There's very few jobs that pay millions unless you're CEO of a Fortune 500 company. Okay, so this is typically going to be a company revenue millionaire. Now, for those of you trying to build online businesses, things of that nature, and you're looking for a mentor, and somebody says, yeah, I made $1 million this year, you got to really question them. Did you make $1 million in revenue, right? Or did you make $1 million in profit? Okay, you got to be very clear, because they can make $1 million in revenue, but if their expenses were $950,000, then they only took home $50,000 in profit. Okay, so that's the next type of millionaire, meaning that this person is able to generate revenues of $1 million per year, which is really good. It means that they've created something that must have some value in order to attract that kind of revenue. Number 6, okay, the 6th type of millionaire is company or job profit millionaire. In fact, I should take job out of there. A company profit millionaire, meaning that their company that they built is actually profiting $1 million per year, meaning that that $1 million is hitting the bottom line. It's not revenue, it's actually hitting the bottom line, right? That's what I call a million dollar company, is when it's actually earning $1 million in profit per year, okay? That's way better than number 5, which is $1 million in revenue, because every company has margins. Some industries have a 50% margin. Some industries only have a 10% margin. You actually want $1 million profit if you can. I would take that over the $1 million revenue any day, okay? And then the 7th type of millionaire, okay? The 7th type, I want you to type this in. It's the asset generating millionaire. It's the asset generating millionaire. This is somebody who has a real estate portfolio, who has a series of businesses, who have dividend paying stocks, etc., that actually pay them $1 million every single year, even if they do nothing. This is the most ideal form of millionaire. Not just somebody who has a cash savings of $1 million, but that has actually bought or acquired assets that actually pay them $1 million a year, even if they aren't working, right? This is the type of millionaire you also want to be. This type of millionaire also gets taxed differently than a millionaire who actually earned it by working through active income, or what they call ordinary income. Ordinary income, employee-based income, actually gets taxed at a higher rate than an asset-generating millionaire who is making their millions off of real estate, dividends, and capital gains. Capital gains gets taxed way less than your employment revenue from your employment. Okay. So those are the 7 different types of millionaires. I want you to be very clear about which one you are going for next. All of you are earned millionaires. If you stay working in a job for 40 years at $25,000 a year, you will all make $1 million. Okay, that doesn't mean that you'll keep it. So a lot of people have this focus on being a cash savings millionaire. Okay, and I want you to be very clear that there are levels to this, right? I want you to start thinking like a company revenue millionaire, or a company profit millionaire, or asset generating millionaire. Okay, so I just wanted to share this with you so that you could be clear that when people say, when people say, who wants to be a millionaire? Everybody raises their hand. I want you to be very clear about what type of millionaire you actually want to be. And you don't have to overwhelm yourself by saying, how do I generate assets that bring in $1 million a year? I don't want you to overwhelm yourself. I just want you to think about what's the next step for you. Okay, earned a millionaire, right? Home equity millionaire, paper equity millionaire, cash saving millionaire, company revenue millionaire, company profit millionaire, and then asset generating millionaire. Okay. So real quick, I'll take any questions. Any questions? Any questions? Any questions? All right, so while you're typing those in, I just want to remind you that right now I'm in the midst of a Kickstarter campaign to actually help young people start paving the path towards becoming millionaires, but it actually starts by helping them avoid student debt. Rather than going in the hole from the ages of 18 to 22, I want to show them how to develop their financial literacy. So I wrote this book called The Undergrad Railroad, and currently I have a Kickstarter campaign for $10,000 where I'm going to give 3,000 copies of this book to students in college to help them get on this path now. What if you had this kind of information that I'm giving to you at the age of 18, 19, 20, 22, 21, 22? I read Rich Dad Poor Dad when I was in college, and from that moment on, I knew immediately that I was not going to be buying a single family home immediately, that I was going to be buying a multifamily home first. So I wrote this for students of color, in particular, Black and brown students, to help them really understand what they've gotten themselves into in terms of college and actually how to escape. I guide them through the escape framework so that they can maximize their experience of college, because it's a lot different than a traditional college student. So I would love your support on that campaign. Please go to theundergradrailroad.com, theundergradrailroad.com, and give whatever you can. And that I have 3,000 students who are literally waiting to receive this book. I have 22 partnering organizations who are ready to distribute it. I just have to hit the goal of reaching $10,000. The way Kickstarter works is we don't hit that goal. If we get to $9,999 and the timer ends, we get none of that. So please go support and contribute and help us move one step closer to getting this information in the hands of students before they get caught up in this rat race, even though they're smart and they're educated and they're hardworking. So with that, any other questions? Laura says, what's your opinion on credit unions? I don't have enough information on credit unions to answer that. Sorry about that, but I love your questions. Laura's next question is also, besides real estate, what else could be a good investment to make? So there are businesses, right? There are businesses to make investments in. Oftentimes, smaller investors don't have access to those deals, but you may see a store that is popping up in your neighborhood, or a friend is running and they have an idea that they are seeking to manifest, and you like where it's going. And if you have some cash, you might say, look, do you need cash right now in order to grow this, right? And they may say yes, they may say no, and you can have an equity stake in that business. Of course, there's a possibility of losing that money. That is the risk, and your equity stake should be based on the amount of risk that you are taking. Okay. Great question. Great questions. All right. So I just wanted to drop this knowledge on you. Another question is, are HELOC loans any good? A HELOC loan could be good. I have a HELOC on my first multifamily home. I have not used it or accessed it yet, but it is there for me to access, meaning that I can call the bank and get access to that money immediately. That's called a revolving line of credit, and I can pay it back whenever at my own pace, but it will have a variable interest rate. A HELOC can be great, but you should not take a HELOC to actually buy a liability. I would only take a HELOC to buy another asset, another piece of property that is actually going to have a cash on cash return that is greater than the variable interest rate. That's the only way using a HELOC really makes sense, right? Or if some people may use a HELOC, if they plan on selling their property, they'll use a HELOC to upgrade the home. They'll put $100,000 into the home. That'll actually increase the after renovation value of the home by 150, and then they'll sell the home, get that extra 150, and pay 100 out of that back to the HELOC. So HELOCs are great if used the right way to buy assets. Okay. Any other questions? Any other questions? All right, y'all. So I want to wish you a great Saturday night. Again, please go support the campaign. It's at theundergradrailroad.com. That will forward you to the Kickstarter page. Please contribute. Again, I'm trying to give this book to 3,000 college students so that they can have this information that I'm giving you a lot earlier. And I know that if they have this information a lot earlier, they will be on track to success. So to sign off, everybody go ahead and type in the type of millionaire that they ultimately want to be. And I will catch you next time. Okay. Type in the type of millionaire you want to be. You have options, or the one you're focused on next. Earned a millionaire, home equity millionaire, paper equity millionaire, cash savings millionaire, company revenue millionaire, company profit millionaire, or asset generating millionaire. Which is your next focus? All right. Type that in the chat. I'll read those off and then we'll sign off for tonight. Go enjoy your Saturday night, y'all. Tamara says you focus on asset generating millionaire. You already at step 6? What's the next focus, Tambra? I think we all want to get to asset generating millionaire, but what's the next focus? And maybe you're there. I don't know. I don't know what you're finding. I'm not in your bank account. I don't know your money. So Sharon says company generating millionaire. Jason says paper equity, but moving towards number 7. Beautiful, beautiful, beautiful. All right, y'all. I'm going to go kick it with the family. Just want to drop this knowledge on you. Again, please support the campaign. It's at theundergradrailroad.com. If we can get over 1,000 tonight, and we're at 900 and something, if we can get over 1,000 tonight, that would be absolutely great. I appreciate y'all. The campaign ends at the end of the month, and I wish you all the best. All right. So catch you later. Peace.